how you doing? We're going live. Good morning, everybody. It's your buddy Uncle Bruce here. Those of you who don't know who I am, I'm Bruce from Creston, British Columbia, Canada. I'm with got my own little channel here, Stock Markets with Bruce. We like to talk about the stock markets in plain English. That's kind of my shtick. Try to explain to you what's going on in the big world out there in a plain English kind of way, and it's easier said than done sometimes. Thank you all for being here today. Welcome to Friday show. It's Friday, January the 23rd, last day of the week. We're going to see what happens today. What is this market going to do? How is it going to work out? At the moment, in the pre-market, looking good. The New York is up 202 points in the pre-market. S&P is up 21, NASDAQ up 51. As a matter of fact, the Dow is looking so good that it is now within 100 points or so of an all-time record. If I got my mathematics working for me, and I don't always, because when you get older, you start to lose it. But the all-time high for the Dow is 35,091. Pre-market, 34,911. 200 points, so about 200 points away or so. If we get 100, we'd be at 35,012, and if we got 180, we'd be about there. So 180 away from an all-time high for the Dow after Monday's drop of 930 points at one point. I think we ended up with a 700-point drop. It's been uphill ever since on the Dow. Is there any instance where they could be declined? Well, I mean, theoretically, sure, but I don't think they will be. I'm sure they have the right personnel in the place. They've, I'm sure, given enough assurances to the banking regulators that they know what they're doing. It's an 11-year-old company. It's not like, they just started in a college dorm in the last 15 minutes. They've been around a while. So I kind of get the impression that it'll go through. They have some pretty senior staff in there. Folks who are certainly eminently qualified on how to run a bank. They're going to likely keep the management of the existing bank they just bought on board. So, they'll be all right. And they'll get their charter. And with their charter, they will become a full-blown banking institution, which means they can now utilize their own capital. And here we go. What's a good price to get on SoFi right now? SoFi's priced right now. It's cheap, under $20. Get in and get in now, and get in heavy duty. Get in there. Is it harder for GameStop to go to 360 than SoFi to 30? Nope, it's just the same. It's all relative, my friends. The buying comes in, stocks go up. On GameStop nowadays, I bet you if we traded 10 million today, if we traded 10 million a day for 10 days in a row, GameStop would go up $100 share. There's so little to stop it, but people need a reason to want to buy it, and they're not being given one, I guess, at this moment. I'm guessing. Anyway, there you are. What are some good call options for GS? Love the show. Thanks for all the knowledge. Goldman Sachs call contracts. Well, I think that the way I have been kind of mentioning it to folks is if you go long, I think that's the strategy you should employ is go way out there. I mean, go out there to next summer, way out there. The stock's at 375, let's say 374.99. So let's take a look at, say, June 22s. That's out there. I mean, no kidding. We're out there. Let's take a look at what kind of pricing you'd be looking at right now. I mean, if you bought 400s, you're looking at a $25 contract. If you're looking at 420s, you're looking at an $18 contract. 430s are $15 a contract, $15.50, $16. These are still, 50 above the current value of the stock. But remember, I'm calling the stock a 750 stock. I mean, even if they only reach 550, and you are into a 420 contract or whatever, a 430 contract, the stock goes to 550. You have a $120 contract. So you're going to go from 15 to 150. You're going to make 10 times your money. So if you can afford even 430s, 440s are only about $13.50, $12, $12.10, $12.50, something like that. Be chintzy on the buy. But if you go in to try to buy these calls, be a nickel higher than the best buyer. So like a 430 is 1540 to 1775. 1540 is a bid, you go 1545 and try to buy it there. The 440s are 1270 to 1530. Put in a bid at 1275 and just wait. If you get it, you get it. You don't, you don't. And for $1,275, you control the upside on Goldman Sachs at 440 and higher until next June. And these stocks go up $15 a month for the next year. It's a $180 move. Your contract goes from 12 to 120, 10 times your money. It goes from 12 to 60, 5 times your money. Stocks at 6 times earnings. So pick it up and go long. That would be my take on it. That's how I would look at it. Definitely going long. When putting in a nickel above the buy price, how long do you give it to come before you readjust? Well, you're always watching the market. So, if you put in a bid, a nickel ahead of the bid, you're the best buyer now. You see the stocks go up another 20, 30 cents, you may find that someone will leapfrog you. On the other hand, if you see the stocks back off 50 cents or 75 cents, you might want to pull your offer and just take it out and then watch the market readjust. And you may find that the next highest buyer has backed off 30 cents. Go in a nickel above that buyer. That might be the way you want to play this. Just kind of, there you have it. So if a company has strong earnings, what are the possible rationales to lead to a down dip, but also leading to a gain in the future? People are puzzled when stocks go down after earnings come out. There are times where a stock will have had a wonderful month before the earnings came out and ran up to anticipated earnings. Then the numbers come out and the stock backs off of it. You sell on the news. That's the adage. You're buying in anticipation of earnings. Why would you buy after the earnings? You bought. The buying has been done for a while and it's going to slump a bit. Sometimes, however, companies come out with really strong financials, but then they come up in the same day when they release their financials, they are asked about, well, what's next quarter look like? What's the next 6 months look like for you? What's the next year going to look like? And then they reveal that, well, we're not so sure, or we're noticing some weakness here and there, or since our merger with this company, or since we've done that, we might be flat for a little while. Well, that's when the stock tanks. It drops 10, 12%. Because people just want nothing but good news all the time, and they can't handle the bad news, especially after a run, so they dump it. That's typical, and it's going to happen. I'm confused on, from what I see in the chat, is that if you're just in the now, if you're just in the money now, barely in the money, you're still losing money. You want to go be beyond your break-even price, more profit than premium pay. Well, yeah, of course. I mean, if you paid $1 for a contract that was out of the money when you bought it, and at the end of the contract's life, in the last 10 minutes, the stock's 25 cents in the money, your contract's going to be 25, 30 cents. It's not going to be $1 because you have no time left on it. Your stock closes, 33 cents in the money. Your contract's worth 33 cents at the very end of the day. That's all you're going to get for it, obviously. But you're buying out of the money, short-term calls. That's the way it is. But if you bought a call for $1, you were out of the money when you bought it. Stock's $3 in the money towards the end of its run. You're $3 plus value on your contract, tripling your money, man. You can do very, very well. That's why people love options contracts. What are your opinion on selling put contracts on these developing SPACs? I like it. I like the strategy if you can get a premium on it. If there's premium, take a look at it. If there's no premium, don't. Even if they're a month or two out, you can always look at that. Absolutely. Get ready, kids. This weekend, oh my God, it's happening. Noon Eastern time for each class, Saturday and Sunday, live right here. And Bruce will be on the whiteboard just going. This can be great.